right, welcome back to another episode of Sky's the Limit podcast. I am your host, Mike Doherty, and today we have Efri Argaman, who is the founder and CEO of OwnEZ, which is a non-QM lender. Essentially, what that means is OwnEZ can give those borrowers that traditionally don't qualify for a normal conventional loan, we'll say. He will look at them in a different lens and try to qualify them for a loan. So if you can't get a traditional loan from a bank, you would want to speak to Ari from OwnEZ, and he'll get into kind of how he analyzes his borrowers and how he got started in real estate investing. So we're really happy to have him on the show here. With that, Efri, welcome.
Hey, Mike. Thank you for inviting me. I'm happy to be here.
Yeah. So why don't you tell us a little bit about what OwnEZ is, how it came about, how you found it, and how you've been helping people with it.
Sure. So basically, OwnEZ is a non-QM licensed lender, mortgage lender. Basically, we aim to provide mortgages to people that can afford buying a home but have no access to conventional lending. Or if I want to use a slogan, we want to convert what we call chronic renters to become homeowners. There is a large population of people that do not fit the scheme of the traditional Fannie Mae, Freddie Mac loans, simply because either they are self-employed or they work in the gig economy and they don't have a W-2. Or there are ITIN borrowers, or for any other reason that do not fit the scheme, and they cannot access actually any conventional loan because the way the system is structured, not because that they cannot afford paying it back. So OwnEZ started with the idea of looking into data points that are more relevant to this target audience and providing them basically with a solution that might be temporary if they can qualify at a later stage, or it might be permanent.
No, yeah, that makes sense. What do you think? Who do you think the your ideal client would be? Probably not someone working a strong W-2 job. Maybe someone like myself who is a full-time real estate agent, which I need to show 2 years of 1099 income. But a lot of the people I work with will also 1099s. They'll use real estate to kind of offset their income. And there's two sides to that story, right? If I could show the most amount of income on my 1099, I'll pay taxes on that. So a lot of people write off a lot of their real estate deductions, but then they don't qualify for a loan. So is that someone, for those that are listening, if they're 1099, but they have a lot of write-offs and they're not showing the most amount of income, is that someone who would be a good fit for you guys to work with?
So this is an amazing example, Mike. So because if you go through the Fannie Mae, Freddie Mac path, obviously you have to show your taxable income. They will look at the bottom line. If you're a smart real estate investor, most likely your bottom line will be negligible because you can write off the depreciation, other expenses that you may have, etc., etc. So we analyze these cases looking into the actual cash flow that you generate from all your sources of income, and then we measure whether you can afford buying a home. We look into other data points, for instance. So as I said before, we aim to convert what we call chronic renters to become homeowners. There are people that live in a rental property for years over years. I may assume that if somebody is capable of paying, let's say, $2,000 towards a rent over several years without any issues, without any evictions, they will be in a position to pay for their own mortgage, obviously around the same amount or maybe even slightly more. So when we started OwnEZ, we decided to rely on technology initially and to collect information and analyze data points that are more relevant in our view to predict whether a borrower will be able to pay his mortgage or not. Today, after we've been around since 2017, we collected enough data to analyze new applications towards the data that we have in our own systems, and with the help of AI, And again, I'm not claiming that we are an AI company today. It's the buzzword, but no, but by using AI, or AI enabled us basically to look back into our files and find similarities and analyze better whether a borrower can will pay their mortgage or not.
Hmm. Wow. So now, what kind of for non-QM lenders such as yourself? What kind of rates and terms would a borrower be looking at, generally speaking? I'm sure it's different per borrower, but let's use someone like myself, for example. I have a decent credit score. Let's say it's 780. I have enough savings to put 20% down on a property, let's say. But I just don't show enough income, to qualify for a traditional Fannie Freddie loan. So assuming those credentials, we'll call it, what would I be looking at with a 20% down non-QM loan, assuming a 780 FICO?
So it's a tricky question. First of all, we don't care about the score.
Oh, okay,
Okay.
good to know.
So we look into the data points, and the outcome of our underwriting process is how much of a house we think that you can buy. This is the number that you get. Once we qualify, or I'll go one step backwards, the way that we get our customers is mainly through realtors that know us, and they have all of a sudden a buyer that cannot get financed. They will just go on the app that we have, pre-qualify the borrower by asking them like 5 questions by themselves, and then once we step into the game, obviously we will look into it's a full doc loan. We will look into the documents, we will analyze it, and come back with an approval letter that states what is the maximum amount of the house that we think that this borrower can purchase. To your point about the rates and the terms, so we do a 30 years fixed like any other lender, no prepayment penalty. And obviously, since it's not a Fannie Mae, Freddie Mac supported loan, we finance it through private money. We're backed up by the OwnEZ fund. OwnEZ fund is a Reg D 506C fund that basically has high net worth individuals and institutional investors investing into it. These people are interested in having a non-correlated, non-volatile investment that give them decent yield. So obviously, we will be more expensive than the conventional loans by a couple of points. And as I said before, it's a case by case basis, and we are trying to keep the very fragile balance between the need to provide our investors with reasonable yield, but at the same time to provide our borrowers with a reasonable interest rate.
So you're probably somewhere in the 8 to 10% interest rate.
In that area, yes.
Yeah, because when you think about it, if traditional Fannie Freddie loans, 30-year fixed, 20% down, or FHA, or you could do low down conventional. Right now, the going rate is roughly around 6.5%,
Yeah, it's
ish,
6.5
right?
now.
So for those, a lot of the clients I work with qualify for those types of loans, and they'll enjoy a nice 6.5% interest rate for the next 30 years until they refinance. If you can't qualify, kind of the next step that I've always been used to is a private or hard money loan. You guys are kind of a hybrid of that because a hard money loan is also private lending, non-QM stuff. Sometimes they'll do less than 20% down, but they're going to be charging points. Typically, for the listeners out there, hard money lender terms could be anywhere from 12% interest in 3 points. So 3 points is each point is 1% of the loan amount. So if you're buying $100,000 property, this hard money lender is going to charge you $3,000 in points. That's a thank you for doing business. It does not go towards anything. It's kind of pay to play, and then they'll charge you 12% interest on the loan. What you're saying, Efri, is that you are actually a step below a hard money lender. You actually have a fund that you've raised a lot of private capital for from high net worth individuals. You're
Yes.
registered. You're licensed in 11 states. and you're actually going to be a little bit cheaper than a hard money lender, but you kind of operate in the same lenses, in the same category as, okay, we're going to take this individual, this borrower, they can't qualify for traditional Fannie Freddie, but they probably don't have the knowledge or the capital to go for a full hard money loan. So that's, you're kind of like that middle ground there.
I guess that we're a solution. We're somewhere in the middle in that
Yeah.
sense, and we're trying to standardize this. Okay, so basically, as I mentioned, in each market that we operate at, we are fully licensed, we are regulated. Um, we originate loans that are bankable in the sense of disclosures and the paperwork that is being done. It's a full doc loan. This is what allows us to raise money from investors because they trust our underwriting. They know what are our default rates, and even we have obviously we have our buy box, but we work on a case by case basis because if you do not have a straightforward W 2, most of the borrowers that do not have straightforward W 2, each one of them has a different story. We have seen Uber drivers that are making a lot of money and they cannot get a loan. We saw people that are working through platforms like Fiverr or Upwork, or they're doing freelance work as developers or designers or lots of stuff,
Yeah.
and they have no access to conventional lending, so they are bound to stay as renters like forever. I think
Do
that
you
one of
sell, do you
excuse me.
sell, sorry to cut you off, do you sell your loans to the secondary market anywhere? Or do you keep them in house?
So, as a philosophy, we season the loans for 3 to 5 years in our possession, and then we may sell them. Yes.
Huh.
So yeah, but our major forward flow buyer is our own fund. This is the benefit of basically controlling everything in the same place. So
Mm.
when we started this business, initially me and my co-founder, we started with our own money. But obviously, when we reached our cap, we started the micro funds of friends and family. And when these guys stopped picking up the phone when they saw our number, and we continued to grow, we became more organized. So on the other side of the equation, we have today OwnEZ Fund 4 and Fund 5. It's two funds. These are two funds that are our fourth and fifth, and the funds themselves are for accredited investors only, administered by third-party administrators with full reporting and disclosure to our investors. And basically, what we do on the other side of the equation, we enable investors that are looking for, I would say, a medium risks investment with yield that is almost 100% premium over what you can get on mortgage-based securities elsewhere, uh, with no correlation to the stock exchange, which means that you can always invest in real estate through real estate investment trusts, through REIT funds. But if it's listed and Nvidia had a bad day, or Amazon or whatever stock, then your REIT will go down even if the base asset is very solid and strong. Because 90% of the trade on the stock exchange is being done by algo trading, by computers. So if the sentiment is negative, you cannot control it. So we provide a solution that is not correlated. It's good for people that want to have capital preservance, and by that, we managed to um, actually control the whole system. Um, because, as I said, our major forward flow buyer is our own fund.
Mm. Wow. Yeah. No, I can certainly see the gap you're filling in the marketplace. So it's really impressive. So for those listening, not only can you can help people in two ways. The way I see it, someone, an accredited investor, could invest in your fund. I assume you're always probably raising more capital for that.
Sure, it's an
Uh,
evergreen fund. It's always open for business.
And then secondly, you can help those who don't qualify for a traditional mortgage. Like you said, Uber drivers, people working on Fiverr, freelancers. Um, maybe you haven't done your. I mean, when you say full doc loan, um, these are full recourse loans, I assume, right?
So in terms of no, in terms of full doc loan, it means that we will still look into your income. If you
Yep.
have tax returns, we want to see those tax returns. Not if, we want to see your tax returns. We want to see your bank statements.
Mm-hmm.
If you have 1099s, we want to see those 1099s. We will look into your major payments. If you have cell phone payments or car payments, we
Mm-hmm.
want to see those documents. We will verify your identity, of course,
Mm-hmm.
and make sure that you're legit. And but so it's a full doc loan. It's not the same loans like in 2007 that people had to breathe and have pulse to get money. So it's a full doc loan. Everything is going through our system. We do proper underwriting. Um, and
Do
and
you
and
finance? Oh, will you only finance single families, or you do multifamily and commercial as well?
so we do only owner occupied.
Only
We will do
owner. Okay.
yeah, and we will do everything that is 1 to 4. So residential only.
Yep.
And yeah, and basically it's interesting that you mentioned that we provide solutions both to investors and also for what we call chronic renters. The background for all of this was that I'm coming from a totally different industry, and in 2009 I managed to put my hand in a little bit of money, and I was looking to make an investment. It was 1 year after the big crisis, and I thought that the real estate could be a good idea. So I started purchasing initially rental properties, mainly in the markets that suffer the most: Las Vegas, Phoenix, Orlando, um, and and a couple of years later, I realized two things. First of all, as an investor, I wanted to be an investor. Period. I wanted to have a nice Excel spreadsheet, make my calculations, cap rate, expenses, yield, and that's it. But at a certain point, I had a large number of doors, and like every other day, I would get a phone call from a property manager telling me that the furnace is blown, there is an issue, there is a late payment or something, and it became a burden because I ended up being a landlord. So, from an investor's perspective, I was looking for an investment solution that will be attached to this asset class because I like the idea of investing in properties, in residential properties, and and at the same time, I was looking for a solution that will take off this burden, the operational burden, off my shoulders. I didn't want to deal with furnaces, water heaters, and such. So this was one thing that we wanted to resolve. The second thing was that some of the properties that I bought back then, and it was a crazy time and very good time to make an investment, not related to my or anybody else's wisdom. Somebody's crisis is always an opportunity for somebody else, and I was at the right time at the right place. But some of the properties that I purchased had already tenants over there, and some of my tenants, they've been in the property for like 12 years, which means that they paid in rent almost sometimes even more than twice that they would have paid for buying the home. And when I started to explore it, I found that post 2008, the system became extremely rigid. So if up to 2007, everybody could get a loan, regardless of who they are, and this was like crazy Wild West market. Then obviously after 2008, the market became extremely rigid, and so many people got caught in this rent loop. So when we started the company back it took us a couple of years to explore this and to do our research and development. But when we started the company in 2017, uh, from day one, we knew that we want to scale it up. We knew also that we want to provide a solution for these two target audiences and basically solve the problems that I saw for myself.
Yeah, no, makes complete sense. I love the story and the purpose. One question I like to ask all my guests is, Efri, how do you spend your day? Walk me through a day in the life of Efri. From the time you wake up to the time you go to bed, how do you spend your day as a full time CEO and creator of OwnEZ?
So basically, my goal in life is not to make a lot of money. Okay, I didn't come to this business or to any business that I have done before with the purpose of making money. I want to be in a position that I can live my life in my own terms. And I'm an avid advocate of keeping the balance between work and life. I'm an amateur motorcyclist. I just came back a couple of weeks ago from riding my motorcycle over Route 66, all the way to Santa Monica. So, to your question, obviously, when I wake up, first thing in the morning, I catch up before everything starts. I catch up on my emails, messages, everything that I did not respond in the previous day. And then in most of the days, I communicate with my team. Um, we go over the ongoing tasks, the daily tasks of running a company, but we also try to be innovative. And at all times, we communicate about how we can improve our underwriting algorithms, how we can use technology to make our processes faster. We have the goal to underwrite any file that we get in front of us within 48 hours. We are aiming to close every deal that we finance within 14 days. Obviously, we're dependent in third parties that we cannot control, but this is what we aim to do. And also, I insist each and every day to free time for my hobbies. So you may find me either in the gym or, if weather permitting, it's 104 degrees here today in Austin, but weather permitting, riding my motorcycle, hanging with friends, reading a book, or learning something new that will enrich my knowledge.
Yeah, great. No, that's awesome. Well, thank you so much for coming on the podcast today. If listeners want to find more, or where can listeners find more about you? We'll link everything in the show notes for those listening right now. Where can they get a hold of you?
Sure. So on the investor side, you can find all the information on our website at www.ownez.com. And if you're a self-employed or ITIN borrower, or somebody who wants to buy a home and have a different story, you can go on our consumer website at www.buyhouseeasy.com, and you will find all the information and you can contact us.
Perfect. Thank you so much. And again, we'll link everything in the show notes for those who want to find out more and learn more about Efri. So, Efri, thank you so much. For those that were listening today, be sure to like and subscribe. Come out with a couple of new podcasts every month. So, thank you for listening. And Efri, thank you for coming on the show.
Thank you, Mike. Take care.
Thank you for watching Sky's the Limit. We're always releasing new real estate content, so if there's something you want to hear, be sure to leave a comment. And don't forget to subscribe to our channel.